right, let's go ahead and get started here. People are still coming in the room, but can get introductions and the legal stuff out of the way first. So first off, my name's Hunter Smith with MetaStock, and I welcome you to this webinar that will be presented by Mr. Stuart McPhee on how to find consistency in your trading, a subject that is very, very popular for a very good reason. If you guys have seen a webinar with us before, you know that we have to kind of get the legal stuff, the disclaimer out of the way to start with. Also, if you're having any trouble hearing me, make sure that you just type in the chat box and let me know. I think I sound okay in the mic, but just want to make sure. This demonstration is designed to instruct you on using MetaStock and accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Now that we have that out of the way, Mr. Stuart McPhee will be speaking with us today on how he finds consistency within his trading. We've actually been working with Stuart for quite a while now. He's been working with MetaStock for much, much longer. Very, very valued partner of ours, is the creator of one of our best-selling add-ons here, Trade Launch Systems, that's now in its second iteration. He's actually been a private trader for nearly 20 years, and he is the author of the best-selling Trading in a Nutshell, which is in its fourth iteration. So we're very excited to have Stuart here today to teach us a little bit about the process, and it's one of the things that I really enjoy about listening to Stuart's talks is a lot of it shows you how to get into a process and stay within that process throughout your trading to help achieve some consistency there. So without further ado, we'll get into it here. Stuart, can you hear me okay?
Yes.
Wonderful. Let me change the presenter over to you, and you'll be good to go.
Is that okay? My screen through okay?
Yeah, looks great.
Excellent. Thank you, Hunter, for that very kind introduction. Very good evening or morning to you, wherever you are in the world. It's good to see the numbers that have attended this webinar. I appreciate your support, and thank you very much for joining us for this next 45 or 50 minutes or so. If you cannot tell where I'm from, if you've never heard of me before, I am Australian, hence why I talk the way I do. So hopefully that comes across okay and you can understand me okay. I'm sure there are many people in Australia themselves actually listening to my section this morning, as it is in Australia, but I'm sure there are others around the world as well. So thank you very much for your support. I hope I can provide you some food for thought and some ideas for you to go away and, you know, do your own research and homework and implement if you see fit to do so. Well, as Hunter said, my presentation today is about finding consistency. It's one of my 3 C words in trading. As Hunter mentioned, in my edition came out about 2 weeks after the unfortunate events of September 11 in 2001. So the interest in the market at that particular time of the launch of my book was not wasn't profound, wasn't at its peak. It was a very poorly timed launch in my particular case, but obviously it resonated with enough people that it's now in its 4th edition. But one of the things that I talk about in those editions in that book is my 3 C words, and one of them is, in fact, consistency. For the record, the other 2 are comfort in the level of risk you're taking and what you're doing with your exposure in the market. And the other one is confidence, self-confidence, confidence in your own ability and your own ability to execute your plan and in fact, in the very plan that you have created. So the one I will talk about today, the 1 C word that I'll talk about, of course, is consistency, sort of doing the same thing over and over again. So in preparation for this webinar, I always thought Albert Einstein said that the definition of insanity was doing the same thing over and over again and expecting a different result. Well, I was overwhelmed with organic listings in Google yesterday when, in fact, I typed in definition of insanity, even to the point of mental health groups being, insulted by the overuse of that particular quote and the definition of insanity, saying that insanity is a serious problem, blah, blah, blah. But, we do talk about that, even if it is cliche, that it's, doing the same thing but expecting something different. Well, we need to turn that on its head and think about that in the opposite way, in that if we can find the right set of tools and the right set of trading rules and our risk management rules and the way we set stops, the way we position size, the way we take profit, the way we use trailing exits, our conditions for entry, if we can, compile a good solid set of rules, and then that gives us an edge, and it provides us an advantage. If we can do that, then we can apply that with great consistency. And we can do the same thing over and over again and expect the same result, which is exactly what we want if we get that right mix correct in the first place. But that's really our aim, isn't it, when we start out? Well, we don't really know what we're doing when we start out, but when we learn a little bit more about what trading is all about, and we start to think in terms of trading rules, and I say process. I know Hunter says, and many, you say process, but it's the same word, obviously. But when we start to think in terms of trading rules and a framework and following a logical step-by-step sequence, we're all talking about doing the same thing over and over again. We're all aiming towards finding a set of rules that's going to work for us. And that's really the goal. The ultimate goal is, of course, make money, and by doing so, protecting the money that we trade with. But we do that by, the process that we follow and the rules that we follow. So here's my outline. I don't have a lot of time with you today, but I'll do my very best to give you, as I said, some value and some food for thought. Very quickly, why I have a trading plan. I'll very quickly talk about my core trading beliefs. I believe in, having principles and tenets, and, I often get emails, in fact, every day, but, it varies. But I get emails from people who have, seen me speak somewhere, or who have, one of the 3 people who have read my book or something like that, where they'll ask me a question about, I've got this situation now, or I've read this on page 3, and what are your thoughts? Often I just go back to what my core trading beliefs are. It's very easy then to respond and provide a response and, answer their question, because I have core trading beliefs. I have these firm principles and beliefs that I believe to be very true and very important in the market. So I'll just quickly talk about those. I'll talk about the trading process, and then I will like to spend half of this session actually in MetaStock showing you my add-on, but actually looking at real examples right now. I've just done a few quick scans in preparation for this webinar, just run the explorers so we don't have to sit there and watch them scan through. But I've just done some preparation on US markets, constituents of the S&P 500 and the Dow Jones. And I'd like to show you those, and I'd like to talk you through what I look at when I'm looking at those opportunities, and how, in fact, one of the scans had 20 plus stocks listed in it. Well, I'm not going to go and buy all 20. So how do I narrow that down? And how do we, again, aim for consistency? I think that's obviously very, very important. Now, I do believe there is a questions area in this GoToWebinar platform, which I've used occasionally. In fact, I've noticed now there's a comment in there already, so thank you for that. If you wish, in fact, people are telling me where they're from, which is very, very nice. If you have any questions about anything during the session, please don't hesitate. I'll do my very best to respond to those. If I need to do that after the session is finished, then I'll do that as well. Okay, very quickly, let's get into the theory side of my PowerPoint, which I spent a lot of time preparing, and then we'll get into MetaStock, and I'd like to talk you through some of the things that we can use MetaStock for, with my add-on, obviously, but how we can look for consistency. This is an exercise right here. Hopefully you can see that okay, that I've run many, many times over the years. And it just really, to me, emphasises the importance of not trading instinctively and just doing what we think we need to do, but actually having a robust set of rules which are compiled within our trading plan. And this simple exercise is, whether I do it live or in a webinar, really doesn't matter. But we have 2 boxes, and you cannot see inside the boxes, but I can tell you that there are marbles in there and they're various colours. In box A, as you can see, has 3 blue, 1 red. Box B has 1 green. You now have the opportunity, let's say this is a live presentation up on stage, you have the opportunity to step forward and, without looking inside the box, select one or the other and put your hand in one of the boxes and pull out a marble, but you cannot see which colour you're pulling out. If you pull out, or if you go into box A and pull out a blue marble, I'll give you $1,000, but if you are unlucky enough to pull out the red, I give you nothing. Or you put your hand in box B and pull out the only marble in there and I just give you $700. Now, it's difficult for me to do this in this environment, but I'll just explain what happens. I then ask everyone, right, who wants to put their hand in box A? Put your hand up. And maybe out of 50 people, maybe 2 or 3 will put their hand up. And then I say, okay, thank you. Box B, who would like to put, boom, all the hands go up. Right, certainly the majority, comfortably. I say, okay, thank you, very good. Let's put all the marbles back in the boxes. And I say, look, I've now changed the scenario slightly. And if you look between this slide here, there's one word that's changed, and that's take to pay, because now the situation is identical in terms of odds and marbles. However, you now face the possibility of paying me money. So if you pull out a blue marble, you have to pay me $1,000. But if you are now lucky enough to pull out red, you don't have to pay me anything. Or you just put your hand in fact, don't even waste your time. We know there's only one marble in there. Just give me $700. And I say, now, who would like to put their hand in box A? And I'll get a few people put their hands up. How about box B? Next to nobody. And then I've realised that more than half the room haven't put their hand up at all. And I might joke about box C or who doesn't want to play or something like that. But the scenario has changed in that now you face the possibility of losing money. And this simple scenario is very similar to trading in that you are often presented with opportunities where you are in profit or have the opportunity to make money, and we have a decision that we need to make. Likewise, we are often in a position where we may lose money or have an unrealised loss, but need to make a decision. And, what do we base that decision on? So very quickly, before I move on, in the first situation, we had the opportunity for a positive outcome, and those 2 choices that I gave you, boxes A and B, could be described as a risk and a certainty. The certainty was 1 green marble. The risk was 3 blue, 1 red. And in that scenario, most people don't go for the blue and the red, the higher potential payoff. They go for the lower payoff but the greater certainty. So therefore, they adopt a risk-averse behaviour. They run away from risk. And that's when we're faced. It's a very natural response. The problem with that is when we are in a trading opportunity or trading situation where we're in profit, have unrealised profit, we see money on the table, we very naturally adopt a risk-averse behaviour. How that affects us is it can then be difficult for us to, see through the entire trade, to wait for that, profit or level to hit its take profit level, to have the patience to see through our trailing exit methodology, which is a lot more open-ended and can go on for longer. We then struggle to follow that because naturally we have a risk-averse behaviour. So we need to be very conscious of that and have those rules in place and get some confidence in those rules and see them through. I always say, how do we get confidence in something? We either develop competence or we see results. And if we can, adopt some of these exit strategies and see results, confidence in those processes or those rules will naturally follow. And that's really important because, as I said, I think naturally we become very risk averse when faced with a positive outcome. The opposite here, so I won't spend as long. 2 choices. Generally, people don't go for the why just pay you $700. I still have the opportunity of breaking even and not having to pay you anything. So we, become very risk-seeking when faced with a negative outcome. And unfortunately, this is even worse when we are often faced with losing trades and we wish to bury our heads in the sand and sort of worry about it tomorrow. Excuse me, but we naturally become very risk-seeking with a negative outcome. Bottom line is obviously that's why we need a plan. Hopefully I'm not telling anybody anything new today. You absolutely must develop a plan that resonates with you, is right, suitable for you. Just, that's really a personal thing. And then obviously we can implement that plan with great discipline and great decisiveness and great confidence. That's obviously critical to trading well. If you've heard that 400 times, well, that's 401, and I don't think you can hear it often enough. So it is obviously important that we treat this seriously and tackle this problem well. Running out of time already, I'm not going to go through much of this. There's my 3 C words. Moving on just quickly, to me, trading is very much a rules-based activity, and I just want us to think in terms of traders are very good at what they do. And the problem with trading a lot is there's no obstacle to entry. There's no obstacle to us creating an account and depositing money and trading. There may be some age restrictions or something like that, but generally speaking, there's nothing else. Well, that can be very easy for us to fall into the trap. Well, it cannot be that difficult. I only need to buy and sell. That's it. How difficult can it be? And it's very difficult for us early on to appreciate how, in fact, difficult trading really is and how much time we do need to take to sort of unlearn a lot of things and sort of retrain ourselves. These are my core trading beliefs. I'll just quickly move through these and then get into the add-on, excuse me, and spend a bit of time in MetaStock. If you've heard me speak before, then hopefully nothing here is new either. These are things that I believed in for a long time. I do believe trading done well is very much a rules-based activity and is very much following a process. I always believe in aiming for consistency. And one of my issues, and really the theme of today's session, is that, and I think, Hunter mentioned this in the first 30 seconds about the importance of consistency, is that for me, too many traders don't have any consistency. They trade very randomly and very sporadically and very indiscriminately. And they'll really just scan through charts hoping something pops out and something becomes obvious in that chart. And I think that's a horrible way to trade. But if you don't know any different, then that's what you believe traders do. And you look at charts and look for trading opportunities. But I very much believe in a simple set of rules and applied consistency. I believe less is more. Again, I think it's intuitive to think that the more opportunities I take, the more trades I place, the greater possibility or chance I have of making money. I think that's an intuitive, instinctive thought. I believe the opposite. I believe in demanding higher quality rather than quantity. Again, I think that's counterintuitive, but I think a lot of things in trading are counterintuitive. And I think, and I've had coaching clients who have reported back to me sometime later, 6, 12 months later, longer, they've said, I've really reduced frequency, I've really cut down on my trading, and wow, it's just so much better. They're enjoying it more, they're not spending as much time on the screen, and they're seeing better results even though they're taking fewer trades. They're just demanding higher quality. But again, that's sort of counterintuitive, but it is one of my core beliefs. Best trades will take time. Don't trade things in isolation. Don't look for one signal. Look for a range of different things to support, almost a weight of evidence approach. Have different things indicating probability and saying this is, a pretty reasonable opportunity to give us that weight of evidence. I've been saying keep it simple for a long, long time. I think ever since the first edition of my book came out, when I signed my book for an extra $5, of course, when I sign my book, I always write keep it simple and then sign it. Simplicity is the ultimate sophistication, says Leonardo da Vinci, so they say. So, simplicity in trading is just so important. And then finally, having data-driven decisions. Again, the largest companies in the world have analytic sections who, process data, whether it be sales or revenue or traffic on the website or anything, all those things, they all have, all that compilation of data, which then drives some very important high-level decisions. It removes that emotion. I think as traders, we can adopt a very similar attitude. I'm a technical analyst. I don't look really at fundamentals. Look, a lot of my time now is spent in currencies, and I accept that that's a very news-driven market. I accept that. But I very much am a technical analysis person. I look at price and I look at trends and I look at patterns and, and key levels and the like. And I think it removes that emotion from that. And I think, again, that's very important to, minimise the influence that our emotions have. Okay, before we get into this, finally, the trading process that I talk to people about, my 7-step process there. Again, I think it's important just, excuse me, to provide a framework for people. So even those people who have been trading a little bit of time still may not have that efficiency, and they may spend way too much time than they need to. And I think this logical sequence, as simple as it is, can provide people some structure and framework, and hopefully, provide you some efficiency. And, trading, yes, you can look at a screen for 10 or 12 hours a day. You're welcome to do that. I couldn't think of too many things worse than doing that. So I have obviously a time frame which reflects that, but I also have a process that I follow that once that process is done, I can literally do step 7 and go and do something else. And that's important. Anyway, that's my sequence. This helps with consistency. If we're always scanning our trading opportunities in the same way, and then step 3, selecting trades the same way, and then always determining initial stop loss and therefore position sizing the same way, and all of those rules are solid and robust and well tested and proven and provide us an edge, you know what? Good things might happen. That's what good trading is all about. It's almost, I was going to say use the word boring. I don't like using the word boring with trading, but it almost borders on that sort of level of monotony and doing the same thing over and over again. I've always said that if you want exhilaration from trading, I don't think the market should deliver you exhilaration. If you want to do that jump out of an aircraft, that will deliver a rush of blood and excitement and exhilaration. I don't think good trading should do that, because we're doing the same thing over and over and over again. That to me is what good trading is all about. It's having a really good set of rules, following and implementing a process and a logical step-by-step sequence. And again, hopefully good things will follow. Just finally, just a few more slides just on strategy or technical analysis. Firstly, I am a technical analyst, excuse me. Therefore, when I'm looking at data, it makes it easier for me to be consistent, because I can have a very mathematical, approach to, and that's what MetaStock really helps me with, and I'll show you that very, very shortly. Having a very mathematical approach, if price is doing this or it's moved above this level or done this, then I want to know about it. And if it hasn't, I don't want to know about it. And that's the beauty of the Explorer within MetaStock and being able to conduct all those explorations or market scans. But this is my approach to technical analysis. It is an approach, it's not perfect, but simplicity to me is what it's all about. And all any form of analysis is doing is trying to give us an idea of what is most likely to happen at the right-hand edge of the screen, right on the chart, right-hand edge. What is most likely? What is most likely to happen from now? That's what any form of analysis is trying to do. We're just trying to increase probability or identify the most likely thing to happen. And I'll just let you in on something, and I'm quite open about this. And I've been doing technical analysis a long time. I certainly don't consider myself an expert, but I've been using technical analysis a long time. Every now and again, I will look at a chart and I literally shake my head and say, I have no idea. The reason why I share that with you, and I don't know if that's right or wrong or common or uncommon, but the reason I share that with you is I think it's a false expectation, thinking that you should be able to reach a level of competency with technical analysis where you can look at any chart and instantly summarize it, instantly assess it, and provide a conclusion and work out what's going to happen or what's likely to happen. I don't think I can do that at all. Some charts are a complete and utter mess, and I have next to no idea. I cannot make any sense of it. So I just share that with you because I think we can have a false expectation that we should be able to do that. And as I said, draw a conclusion straight away. Anyway, I just thought I'd share that with you. You're welcome to jump in the comments there and tell me whether that's common or whether you have experienced that yourself. But I certainly, come across, come across that a little bit and just go, wow, I just don't know. I have no idea where this is going to go. And of course, the obvious solution is next chart and just leave it alone and move on to the next. Quickly, so again, coming back to consistency, I believe in getting an edge, proving or disproving, but proving and validating that edge, and then having the discipline to stick with that edge and to have that process and what have you. And I guess the greatest exponents of this organisations that have many tables looking like this in them, and I don't need to explain to you much about this, but this particular game, it provides the casino an edge, and the edge is in the form of the zero at the end, because the payout, all the odds and the payouts are just so fair. 3-1 for that and 2-1 for evens and odds and blacks and reds. It all just seems fair. It seems reasonable. But of course, there's something that gives them an edge, and when they have volume with the number of rolls and amount of money that goes on, that zero at the end provides them an edge. They apply that edge absolutely every time, and guess how well they do out of this particular game. You certainly don't hear too many stories of them not doing well. This is I hope you don't mind me quoting myself. We're about to get into MetaStock literally in a minute or two. I hope you don't mind me quoting myself. It's very simple. Just commit to mastering one setup and then execute that with great discipline and with consistency, right? So forget about having 20 different strategies or 10 different strategies. How about we just master one? You've heard of jack of all trades, master of none. Well, let's become a master of one. And you know what? If we master that in years to time, let's go and grab 2 and 3. But let's just start with one rather than trying to, do well with 10 or 8 different strategies. That's just my take on all this. Simplicity, I think I need to get into MetaStock here. Just check. Yeah, let me get into MetaStock. This is just my idea of simplicity. I won't talk about this much more. The time-tested principles are relatively straightforward. Cutting a losing trade is a relatively straightforward concept. In simple terms, if we buy something at $10 and I tell you if it gets down to $9.50, get out of it. That's a simple concept to explain to people. So trading can be quite simple. I think we very naturally adopt we're searching for a complex, complicated solution to trading, because we believe early on that trading is actually not as easy as we thought. It can be quite difficult. So I love this quote that someone gave me many, many years ago, who said, hard to be simple, simple to be hard. And that's describing humans, describing people. It's very difficult for us to simplify things, but it's very easy for us to complicate things. And that is absolutely 100% spot on. All right, just a very natural thing for people. It's very difficult for us to simplify. It's very easy for us to complicate. Well, in trading, we absolutely need to, to simplify and certainly not complicate at all. Okay, let me get into MetaStock. Enough of all that business. I do have a slide at the end I have been criticised previously, rightly so, that I don't sell and I don't mention my add-on much, and it has been a bestseller, and it has helped a lot of people around the world, not just in Australia. So I will certainly talk about it here in MetaStock. I'm going to use it as a tool to explain a few things to you, and I certainly have a slide at the end just sort of summarising what's in it. I'm sure Hunter back in the MetaStock office has exactly the same. So hopefully you can all see my screen okay. And just so we're all very, very clear, I do have MetaStock open and I do have the Power console open. Now, Hunter in his introduction this morning, or evening, depending on where you are, said, Stuart's going to talk about how he, is consistent and how he sort of strives for that consistency. And I thought to myself, this is great. My webinar could last 5 seconds, because for so many years, I've been using MetaStock since 1999. And I've often said, in fact, I said it in my book, that the software that I've used for all that time is the thing that helps me with that consistency, because it's the tool that is known as the Explorer, which I wouldn't know what to do without, mind you. I have no idea what I'd do if I didn't have the Explorer. I'd have to go and search for something else and start from scratch and build it up. But when I have something like the Explorer, which looks for my criterion and filters out those securities or those stocks that don't meet my criterion, and I'm left with a short list at the end, that immediately assists with my consistency, because I'm simply not looking at 95% of the stocks that just don't meet my rules. So having rules in the first place is obviously paramount, and we need to have something to base this consistency on. But then having those rules and, applying them in MetaStock and creating the explorers does an amazing job of consistency. And I still remember my mum to this day who would say to me, "Oh, what do you think of this bank?" Or what do you think of, BHP, for example, the largest mining company. "What do you think of BHP?" And I noticed someone's from Broken Hill this morning. What do you think of BHP? Like, I might be wanting to buy some. And I'd have to say, Mum, I actually have no idea. Like, I'd have to look into it. And my mum would just be flabbergasted. Like, she'd throw her arms up in the air and say, "What? I thought you were in the market. I thought you do all this stock stuff and you're investing and you're trading, and you can't tell me what, one of the largest companies on the exchange is doing." I said, "No, I cannot, because I haven't looked at a chart of BHP in a long time." And then I had to explain to her that I only look at, this is the confidence I have in these systems and the Explorer, I only look at charts that actually are meeting my criterion. I don't just go looking randomly, and this is the problem I spoke about, I don't go looking randomly or indiscriminately just looking at charts. I don't wake up in the morning and hear some story on a bank or BHP as an example and think, "Oh, I should go and look that up. I should go." That's just not what I do. I have confidence in my own process and my own rules that only if it appears as part of a report, as part of an exploration, will I actually look at it. Now, again, I'm not saying that's right or wrong, but it's just giving you an insight into how I look at the market and how I approach it and how much confidence I have in the rules that I have in place. And I do concede that once, when you've been doing this for a long time, and a long time, I'm not talking about 50 years, but when I've been doing it for a number of years and I've been using very, very similar rules along the way, and it's done well for me, but at the same time, some of these rules have done an incredible job of saving me from losing lots of money and then making a bit more money and then saving me again. I cannot express in words how much confidence that gives you in a set of rules and a process. And I think ultimately that's what we're working towards, is getting into a position where we could not care less what anybody else thinks about the market. We are certainly not turning on, market commentary channels and listening to what, Mr. someone else, has to say about a particular currency pair or a stock or anything like that, because we have such confidence. Anyway, what I've done is I've done a few scans, as I said, in preparation. By the way, this is actually an insight. This is what the Trade Launch Systems, abbreviated to TLS. This is, in fact, what you will see in your MetaStock if you do have my add-on, or if you were to purchase my add-on. You can see there are now 4 systems. Originally there were 3, but now the Trade Launch Systems 2.0 has 4. I can be perfectly open with you now and tell you that in my retirement fund, we call it our superannuation fund in Australia. With my retirement fund, I use the altitude system. It's more of a medium-term, conservative. It's a scan that I only do once a week, so it gives you an idea of the sort of time scale or time frame I'm looking at. I don't scan, excuse me, every day. If something is good on Tuesday and I want to be in it, I certainly hope it's still good on Saturday, that sort of thing. And I hope it's good the following Saturday and in a month's time, et cetera, et cetera. So I don't see the requirement to be looking for those things every day. So that's what my altitude system, altitude in the sense of reaching altitude and looking for things that just continue to move higher and higher. And again, I'll show you the scans from the US market. So what I've just done, the ignition system is a much shorter system. Well, it is short. It's not really, really short term, but it's more of an explosive, hence the term ignition. It's more of a, a reversal. Again, I'll show you this in alignment with the longer term trend and just looking for a shorter term. Reversals is, as it would indicate, just looking for reversals. And the other one's slingshot, which is a variation on ignition. A little bit more archaic term as opposed to ignition and altitude, but the slingshot is more of a, it's similar. It's definitely trend following. It's when prices revert to mean and come back and then explode away and move back in alignment with the longer term trend, hence a slingshot approach. Just give you an idea, I did a scan of the S&P 500 just before this presentation. This is what's come up. So again, I'm and this is a lot of stocks as far as I'm concerned. So when we go from 500 down to, I'm guessing it's 30, give or take, we've eliminated 470 odd. Well, automatically I'm getting some level of consistency. I'm not looking at the others that don't meet my requirements. Now, as the disclaimer said early on, I'm by no means saying go and buy all these or don't buy them or anything. It's just simply using it for illustration. So now we have an issue where, again, I'm not going to purchase all 30. So we need to narrow down this search. And you'll notice I've got a number of columns here providing additional information. And as I would hope you would know, we can easily rearrange the stocks in the report based on the column heading. So I can rearrange them for price, from lowest to highest and vice versa. The bracket is a technique I use to look for something that's moved well, and I scan for above 75. It's just 0 to 100. It's almost, if you understand the stochastic oscillator, it's very similar to, it's almost identical to a stochastic, not quite, but it's capturing a much larger time frame. But it's a similar concept in that I'm looking from 0 to 100. If it's down at 10, it means it's right down near the bottom of that sort of longer period range. So I'm looking for something in the top 1/4 of that range, hence you won't see a number in that column of under 75. And clearly something higher up towards 100 means it's trading right towards the top of its range over the last period of time. And then finally, a concept I've been using for second last, a concept I've been using for some time is the volatility percentage. So that's simply taking the current price, taking the volatility, the average true range, as a percentage of the current price to break down its sort of movement as a percentage. So we can see we're ranging here from 1.3 up to above 3. If we were to do a scan beyond the top 500, we would probably find more volatile stocks. But again, we could rearrange saying, 1.3, geez, that's not a lot. And it isn't an average movement a day map. So I can rearrange them and start looking at companies at the top of this list as an example. In fact, I might just do that right now. So we'll just go open chart there, and hopefully all going to plan. Excuse me, my connection's still okay, and that will open that up. We'll go open chart for that one. And then I don't even know how to pronounce that. Activision something. Sounds like a pharmaceutical company. I could be completely wrong, of course. In fact, I'm sure I am. So just quickly have a look at those.
Software company.
Software, okay, thank you for chiming in. Well, it had a V in it, so I immediately thought of pharmaceutical, but anyway. So just we've got 3 charts open now, and just giving you an idea, I'm just going quick scan, that one there, and that one there. Can you automatically see similarities in all of those 3 charts as I just sort of went through them? I'll just column them then, and we'll just zoom in. 1, 2 clicks. 1, 2, and 1, 2. So automatically, certainly stocks 1 and 3, there's a great deal of similarity there. Can you not see that? So automatically you can see that we're achieving a level of consistency in that we're only looking at similar charts. Now, obviously, there are a lot more in that list, and I just randomly went by volatility and start at the top. We could keep going, obviously. We could rearrange them by price and look that way, but just automatically you can see there's some similarity in those. And I mean, these are good looking charts. If I just look at this one, again, don't know what this one does, but just zoom out for perspective, and we can see what a wonderful last, 1 or 2 years it's had, obviously tripling and more in price. Well, there's an opportunity that clearly if I was to do a scan back, I'm pretty confident it would have come back and been presented a number of times throughout this run, but it's still being presented and still is an opportunity. And I could digress and go into another conversation about why people wouldn't buy this now, thinking the run is over, it's already, the ship has sailed, we've missed the opportunity. But of course, people were thinking that at $100 and now it's almost double that. People were thinking that at 50 and they were wrong too. So who's to say that we'll be wrong today? But then I digress by saying that. But automatically we're achieving a level of consistency. I just wanted to also digress with, let's say there are too many opportunities here and you have your own rules. So let's say you do use my add-on because all of a sudden it's finding stocks that resonate with you and you like the look of them. Well, here's a situation where, hey, that's too many. Look, I know personally that I don't want stocks that are trading less than $20 or more than 300, or the volatility is too little. Let's say less than 2. I don't want to see that. Well, again, if I may, using MetaStock, it's really easy to fix that. So you can have an existing add-on scan like mine. You can then, using the Explorer, I think I just should share this with you, create your own exploration. And let's call it additional filter or something like that. And of course, I'm going to whack a lot of symbols at the beginning to put it at the top of the list. I can come to the filter here, and let's say I don't want to look at any stock above 300. So I simply do C less than 300. And then let's say I wanted to have a volatility filter and I didn't want to see anything less than 2. Well, not knowing the formula, I do, but maybe you don't, we can use, of course, the functions area. And anything in an add-on, including mine, are under custom indicators. So I just simply scroll down here to TLS. There they all are. So you can see the number of sort of indicators and tools that are behind all this and, driving all of this. And all I need to do is come down and find TLS volatility percentage, because I can assure you it is very much an important part of my system. So it is there. So I could reference TLS volatility percentage, ensuring that I have paste arguments checked. I can click OK, and then at the end of that say greater than 2. Done. So what that allows me to do now is I have my own additional criterion where I want the price to be less than 300 and I want the volatility to be greater than 2. And assuming all of that is syntax-wise correct, I can click OK. MetaStock's OK with that. And there it is now at the top of my Explorer list. And hopefully you know that you can run multiple explorations. So we can select the top one there. We can select my altitude. So now both are selected. And using the multiple exploration options over here, we can ensure that the altitude system the altitude system runs first using like the S&P 500, for example. And then straight away afterwards, MetaStock will run the additional filter scan using only those stocks that made it through the first scan. So I digress with it. I just popped into my head then as I was thinking about it, as I was talking about it. So that is another option that it provides you, that any add-on you have, any existing scan that comes, pre-installed with MetaStock, you can create your own additional filters on those and create another Explorer and run that as the second Explorer. I just thought I'd share that with you. I'll get rid of that. But that's something that you can do within MetaStock, obviously. And of course, if we were to select any of these, one of the things, one of the things that I have, of course, is my expert advisor for the altitude system. So I won't change a lot here, but one of the things it does do is, of course, provide the commentary. So in this particular commentary, and unfortunately the text might be a little bit bit small for you to see right there, but one of the things that my commentary does in the altitude, and again it comes back to consistency, is actually performing calculations for you. So these risk management calculations or decisions that we need to make that are so critical, like where do we place our stop, how many stocks, how many shares, what position size do we take on? And of course, we could modify this for leverage. It's just a matter of changing some numbers, changing formulas. All of a sudden, we are looking for stops the same way. We are position sizing the same way. Guess what? We are achieving a further level of consistency. We are doing things the same way over and over again. So when I say to you, I wouldn't know what to do without MetaStock, I really mean that. Because I have so many little things, and there's even things that aren't in my add-on, and perhaps Hunter wouldn't like me to hear me say that, but there are other little things that I run and do that aren't in the add-on because I've just created all these other things which help me do analysis, and it's all a matter of achieving consistency, having something that works, and then having a tool, I guess, to implement and to achieve that level of consistency. So if you can just see it there, it's creating stop loss price and doing some position sizing and other sort of calculations in there. And of course, that was that particular NVIDIA. That's the one that sort of popped up a little bit. And then this one here, as an example, again, I believe this is a software company. Again, one of the other tools which greatly assists with consistency. Let's say we just achieved an entry back here, the 11th of August, then I'm obviously able to apply my trailing ATR exit or stop. And there it just starts there. Now, obviously, that would draw back further if it was if we'd entered further back. But all of a sudden now we have our trailing exit strategy in place. Again, you can modify that, how far away that line is. You can reduce the multiple of ATR, and I'll just move the line a little bit closer. So all of a sudden, again, we have these very important rules being, you know, done for us or calculated for us, again, coming back to achieve levels of consistency and doing the same thing over and over and over again. That's really, really important. Just give you an idea, I think it's only fair that I go to the ignition system and just quickly show you some of the stocks that came up in that particular list. Excuse me. Again, you can see the price there. There's not as many requirements. I'm just being open with you. There's not as many calculations in ignition as there are for altitude. Again, I'm just randomly selecting these. E-Trade, because I'm not going to embarrass myself, I actually know what they do, so I'll have a look at E-Trade. I haven't looked at this chart for a while. Let's just have a look at this. Just loading up there. You know, it's a good-looking chart. If I zoom out for perspective, yes, it's had some prior history through GFC and the like, but obviously now starting to do some good things. So, again, if I just apply the altitude, the ignition, I beg your pardon, the ignition template, we can see it's probably doing all the right things. The longer term trend is up. And again, I'll just share with you now what the ignition system is looking to do. We're looking for the longer term trend because I only want to trade in direction of trend. And we are just looking for opportunities like these arrows here to get into that existing trend. Because it's all long, because it's all up here, you will not see any red down arrows indicating a sell, because they are, to me, very poor trading opportunities because they're against the longer term trend. It's that straightforward. I consider trends that trade in alignment with the longer term trend as A1 quality trading opportunities. Those that look for little counter trend sort of retracements, they're just low quality. Every now and again it will pay off, but I'm not after every now and again. I'm after consistency, high quality, and trading less is more. So obviously now it's presented another opportunity because we've had that little retracement. It's now started to, you know, just turn over again and roll back up. In alignment with a longer term trend, it's now presenting me an opportunity to potentially, and hopefully you can visualize this because this is what happens. You know, it's had a good sort of 2 or 3 weeks here retracement, and then it's exploded up here. 2 or 3 weeks, just a little retracement, and then potentially we could be right now back down here somewhere. Can you visualize that? You know, 2 or 3 weeks down, and then this signal back here, and then it's rolled back up again. So we're just looking for the same thing over and over again. That's all we're trying to do. And that's what the Explorer certainly helps with. What I'll just quickly do is just do a scan on the Dow Jones, only 30 stocks, won't take too long, on altitude. So that's a little bit more medium term. So again, we're just looking for stocks that are moving well, moving higher, you know, just steadily moving higher. So, excuse me, again, looking for the same set of rules all the time. Again, of course, we're only looking through 30 stocks here. So what do we have here? A company called Apple and Boeing. Now, of course, I'm a technical analyst, so I really don't know what these companies do. So maybe, Hunter, you could chip in there. And of course, that's Australian sarcasm at its best. I obviously understand what Apple and Boeing do, so mute that mic again, sorry. So we'll just have a quick look at Apple and just open that up, and Boeing. Thank you for indulging me. And Apple and Boeing, and again, hopefully they just look similar. Again, there it is. So there's Boeing. We'll just zoom out for perspective. Clearly kicking goals and doing very, very well. And what was the other one? Apple. So again, just similar, okay? Just similar sort of price action, just doing all the right things. So that's what I'm looking for. Now, if we find these and we have the confidence to get into them, that's again where we just create a, let's just go back to Apple here. Don't know why that line's here, but it is. Let's just, again, we can use our trailing ATR stop. Excuse me, just start somewhere up here, drag the indicator on. Obviously, it's TLS. That's one of the ones that I've had previously, but it's down here somewhere. There they all are. So these are all the indicators that actually are available to you. And a lot of these, as I said, provide the backbone or the calculations, like these brackets here and the volatility and the like for the calculations, volume, strength and volatility, obviously provide the basis of a lot of those calculations within the scans. But the trailing stops that I just demonstrated to you before, they are definitely in here somewhere. That they are trailing ATR and also as a percentage. And one more thing, I did do a scan before and had a quick look. These two stocks, now these are ignition, they're short term, but they're looking to go short, right, to go down. So again, I'm just going to help you. We'll have a look at these and I'll just tell you what I think very, very quickly. So again, this is where something could suit even those who trade options, you know, buy some puts, write some calls on these, because we know how prices tend to fall a little bit quicker than what they go up. So firstly, Southern, let's just have a look at this. So clearly it's found it because it's sort of drifting lower and just sort of moving down. Now, my only concern with this is a level of support. Sorry, I just need to grab my, not line studies, trend line. So my only issue here is, of course, this level of support through here, 46, 46.50, 47. Now, it's obviously happened just here, but the fact that it happened not so long ago and found some support would tend to sort of move me away from this particular one. If I went to this one here, this has similar support, so it's rallied back up and now rolling over again. This one, this one looks much better because it doesn't have that previous history back here of having, you know, secondary support and therefore likely to be a little bit stronger. Do you notice the difference there? So when it comes to consistency, yes, MetaStock or, you know, any scan is doing the majority of the work for me and it's helping me achieve that level of consistency, but it's not 100% mechanical because I still have that discretion, which I absolutely want, I can assure you. I've never been a fan of automation and algorithmic trading. I'm yet to be convinced on the merits of that. I could be convinced at some point in the future, but I'm not yet. So I still want that control and discretion, but MetaStock is doing the vast majority of the work for me. But hopefully you can see the difference. They're similar here over the last couple of months, but the fact that it's done this certainly points me towards this particular one much more. So again, we're just, you know, looking for that short opportunity. That's the sort of way I would look to do that. So there's just some examples of looking at the scans and narrowing it down. Certainly when you have, whoops, that's the Apple one, back to the S&P 500 where there were maybe 30 or so, we need some way of just sort of eliminating those a little bit further. No scan there. And those ones as well, we can, you know, have an add-on, have pre-existing explorations from MetaStock that are pre-installed, and you have that control and flexibility to create your own additional exploration and just set up your own little rules and immediately run that scan straight after the primary or the main exploration. And you know what, I'm always helping people with MetaStock. So if you have any questions about the formulas that I've used here, I'm happy to share some of those with you. If you have any questions about other requirements you have, I'm always helping people with formulas. And as Hunter could attest to, I know most of the staff within the MetaStock office, and occasionally when I cannot do it, I certainly go to someone in there and just ask for their assistance. And of course, they're always willing to help. So there's certainly a lot of support available to help create, you know, your own environment where you have a great deal of confidence in the tools that you have and are able to achieve all those things that we dream of in trading. And certainly consistency is a big part of that. So just to finish off, I'll just run through. So now we've got, you know, this just sort of summarising what my add-on has. You've seen it now in MetaStock. The main systems, only because they're mine and what I've been using for a long time, is altitude and ignition, and I've put in the reversals and the slingshot ones in there as well. And of course, there's a number of other indicators and what have you available to you. And of course, I'm always only an email away, and I do get emails from people using the add-on just to clarify certain things. I've developed an FAQ page with a number of sort of those questions that people have asked and how I've responded to those. So I'm certainly, you know, if you purchase my add-on, I'll be greatly appreciative, and I'll certainly pay that back in any support or assistance I can provide you in implementing it and giving you some confidence and helping you with your trading. And I say that with great sincerity. So I'll certainly be here to help. Anyway, I think that's it. We're certainly approaching the end of the 1 hour, and I know Hunter wants to step in and wrap up and finish up. So, look, it's gone a little bit longer than I expected. I can waffle as well as anybody. So, thank you very much for your thank you very much for your time the last 1 hour, wherever you have been in the world. It's certainly been great to have your company. I hope I've provided you some food for thought. If you are a MetaStock user, perhaps just shown you a few things that you can implement, just change the way you're doing things. Again, great to have your company. I'll hang around for any questions you have the next 5 or 10 minutes in the chat in the questions area. But with that, I think I will hand back to Hunter, I'm assuming all the way back in Salt Lake City in Utah, and get you to finish up. Thanks, Hunter.
Yeah, thanks for doing this event, Stuart. We always love having you, go through your system and talk about your process. And, again, I never want to sound like I'm harping on something, but I can't drive home enough the importance of having a trading system. And your trading system is not just made up of indicators and what philosophy you follow, but it's the actions. It's that process that you go through every single day or every single week, and that is really in an industry with so many variables that it's the only way that you can achieve, your consistency. Now, Stuart obviously went through some of the different parts of his add-on trade launch, which it's in its second iteration, comes with all of the indicators and all of the explorations, the expert advisors. So in other words, you not having to rely on watching this webinar over and over again. We've done a couple of other trade launch webinars as well. Stuart is wonderful at training and teaching people and assisting people if they have any questions. But the reason that this works very well in MetaStock and that this is one of our top selling add-ons is mainly due to the fact that it actually walks you straight through his trading system, what to look for day in and day out. So one of the things that we wanted to give you the opportunity to do, those of you who have attended the webinar, is we want to give you the opportunity to really get into Stuart's system, to really apply the trade launch methodology, at a bit of a discount for, joining us today in this webinar. So the normal price for trade launch is $4.99. For attending this webinar, we'll go ahead and knock $150 off, so $349. That's a one-time cost for Stuart's add-on, and it comes with all the indicators and actually more than what you saw today. So like Stuart said, he's very, very good at training people. He's very good at assisting you, once, you get his add-on and start learning his methodology, definitely through his website and the different webinars that we, do with Stuart, et cetera. So a couple of ways that you can get it. You can just go ahead and email me at hunter.smith@metastock.com. You can come into our sales chat, metastock.com/sales chat. Just ask for the trade launch add-on by Stuart McPhee and mention that you came to the webinar. You can always visit Stuart at stuartmcphee.com as well. I believe we had a one question in here by Adam. Australian dollar, US dollar, or depends on where you live? Stuart, I believe that's directed towards you if you're still in here.
Well, I think the add-on is in US dollars, isn't it?
Oh, yeah, sorry.
I think that's sorry.
Yeah, I thought we were talking about a Forex pair or something there for a second, so that makes sense. I could have answered that, jeez. Getting a little late here today. So with that, yes, it is in US dollar. And you can come on into chat or just shoot me an email or contact Stuart for that. So without waffling too much more, we're going to go ahead and end this webinar. But thank you again so much, Stuart, for speaking this afternoon. And thank you for attending the webinar this evening, guys. And as always, happy trading.